quick for, I believe it was the Department of Finance. There were some comments made about future economy, and I think he said it looked good for like 4 years. I wanted to ask if they took into consideration, so we've seen already one of the highest spikes in inflation, and if they took into account what they're seeing for inflation. That was my question, Madam Chair. Thank you.
We'll let Department of Finance answer, but I did want to just point out, Mr. Dahle, that was LAO that was referring to those. But
Thank you.
We can certainly have the LAO comment also. Go ahead, Erica.
Thank you, Senator Dahle, for your question. And I would just reiterate that our budget includes lower revenues in the budget year and in the out years than compared to the LAO. The LAO revenues do grow at about, I believe, 4% in the out years, and the difference between the May revision and the budget, the revenues included in AB 128, grow to be about $20 billion, at $20 billion in a difference in terms of the gap. And so I think your question is more in line with the LAO revenue, so I'll turn it over to Mr. Pettit.
Mr. Pettit, go ahead.
Okay, thank you. Yes, I think our revenues, I will just note, Senator Dahle, my comments on our revenue outlook were particularly focused on kind of the budget year period. And, we think that in particular, we think it's, we have more confidence in our forecast, of course, over the next 12 to 18 months than maybe, there's greater uncertainty the further you go out into the future. And so that's the first point. The other point, I think your comments about inflation are well taken. In my mind, one of the bigger risks related to inflation would just be that if it did become higher than expected, or if the consumer expectations and employer expectations became what they call unanchored, there is some potential that the Fed would have to act sooner than they're currently signaling to the market. And in that scenario, there is some potential that Fed tightening could cause the economy to slow. And in that scenario, we would expect revenue growth to slow as well. So, I don't think that's outside of the realm of possibility at all. But at the same time, there are a lot of indications that a lot of the inflationary pressures that we're seeing right now have to do with kind of the base effects of comparing current price levels to where what was going on 1 year ago when the economy was in a free fall. And so we're kind of comparing that current price changes against the abnormal base from last year. And so, some of the changes too that we're seeing have supply chain disruptions due to the pandemic and trying to turn the economy, back on, if you will. And, so there is a good possibility that a lot of the inflation that we're seeing right now could prove to be relatively transitory and not with us going forward. But I don't want to be too sanguine about that. I think your concern about it is founded on some reasonable basis. So.
Thank you, Madam Chair.
Yeah, go ahead.
Just a thought. So just want to share. I think that we need to be cognizant of the fact that we are seeing inflation, and we've infused, not California, but at the federal level, $6 trillion into the economy, and we've heard that we're going to see interest rates stay flat, or they're edging up a little bit, but not at the rate of inflation. So, just a comment: if it cost you, twice as much to get done what you're trying to do because of inflation, and it really is going to impact the outcomes of our budget. And so, I just wanted to see if they took that into consideration. I appreciate the opportunity.